Welcome back to the audio companion for Tuesday Target. I'm Penelope.
And I'm Constantine. This week's letter has a title I love. Buffett smells scarcity. Penelope, set it up.
Okay, so the big idea is that this entire AI rally, all of it, is really one long hunt for things that are scarce, something in short supply.
Right. First it was GPUs. Everybody piled in. Then the GPUs got sorted out. So the crowd went looking for the next bottleneck.
Power, then memory chips. And now, I promise this is real, tiny ceramic capacitors that cost literally pennies.
Pennies. And the letter calls it a treadmill, which is perfect. Every time one shortage gets solved, the chasers have to sprint to find a new one.
Because the story only works while something is scarce. Solve the shortage, kill the magic.
So here's the clever turn. While the crowd is chasing smaller and smaller parts, watch where the boring money goes.
Buffett's successor just bought a home builder. Barry Diller's circling a casino. Another billionaire's after Caesars.
A plot of land, a hotel, a gaming floor on the strip. Try printing more of those.
And that's the whole point, isn't it? A server farm can spin up more chips. Nobody's making more beachfront.
Manufactured scarcity vanishes the second the music stops. Real scarcity just sits there, stubborn, boring, and very hard to copy.
Love it. Okay, let's get into the market read because the letter pushes back on the easy, it's all a bubble take.
It does. And this surprised me. Roughly 2/3 of the rally since ChatGPT launched comes from actual earnings, not just people paying higher multiples.
Profits grew 27% year on year last quarter. And the price to earnings ratio actually slipped from 22 down to 21.
So the earnings are carrying the weight, which makes this thing genuinely harder to short than the doom crowd wants to admit.
Then there's software. The software ETF ripped about 45% off its April lows. Best month in roughly 25 years.
25 years. But it's now slammed up against resistance and looks badly overbought. So careful chasing that one.
And a wild detail on Alphabet. Google's parent raised $80 billion to fund its AI spending.
Here's the kicker. A chunk of it goes to cover the tax bill on employee stock. A multi-trillion-dollar giant tapping the market to pay its taxes.
That tells you exactly where the free cash flow is going, straight into the AI build-out.
Meanwhile, the bond market's flashing a quiet warning. The 30-year yield's near 5%, and odds of a rate hike this year jump to around 75%.
Which is the reversal nobody's talking about. 6 months ago, it was all rate cuts. Now the conversation's flipped.
And the calendar this week is brutal. Jobs data, inflation prints, a brand new Fed chair's first big meeting. Any bounce in bonds keeps getting sold.
So what's the playbook? The letter's tactic is stay long with discipline, not abandon.
Protection is dirt cheap right now, so own a little. Trim your most stretched winners into strength instead of grabbing for that last 10%.
Keep some dry powder for the unloved names. The melt-up can run. Just don't be the last one holding the bag.
And then there's the Tuesday target trade itself, which ties right back to the scarcity theme. Korea, the EWYETF.
Which has gone vertical on SK Hynix and the memory frenzy. The single cleanest proxy for the most crowded bet on the planet.
And the letter's blunt about it. You don't short a parabola outright. That's how shorts get carried out on a stretcher.
So instead, a double calendar. Sell the near-term options, own the later ones. You win if Korea just cools off a bit and grinds, while the rich front-month premium quietly decays.
With a nice twist. The two companies driving that ETF both report earnings after the expiry dates. And the longer leg is parked right after all the June shenanigans.
Smart. Quick reminder, though, that's food for thought, not an official entry. The real trade alerts live in the members section.
And if you want the whole framework, capital efficient, risk managed, built from the option chain up, that's what the Elite Trader Plan and the mentorship calls are for.
All educational, of course. Nothing here is financial advice, and past performance never guarantees what's next.
As the letter signs off, if you're only here for the money, look elsewhere. This takes a real dedication to the craft.
Well said. That's your Tuesday Target companion for the week.
Read the full letter for the details and the charts. We'll see you next Tuesday.
Ciao, ciao, everyone.